Hello, everyone. Happy Thursday. How's everyone doing today? Hope everyone is fantastic. Sterling was always with the news when he can do it. When his work does not interfere. How is everything going in the car business, Sterling? Hey, good morning, Patrick. Thank you for the feedback on the text box. As we can all thank Jacob in the chat. Good morning, Tony. Yeah, Walmart dropping pretty big, beat, but guiding that sales are going to be softer. Uh, and notes it could have done a better job on third quarter expenses, but they're really getting hammered this morning. We had the Philadelphia Fed numbers out. We had unemployment numbers. What else? We have Anissa here. Good morning, Anissa. Good morning, Jacob. Again, thank you for all your help with the background on that. Again, good morning, Martinez. Good morning, Options 22. ES double double. We'll take a look at the ES in a minute. Hey, is that supposed to be a HI or a hey, Richard, or what? I don't know what you're up to this morning, Richard. Good morning, Royal Palms. So, what is this? I'm just seeing what's. Oh boy. All right. So we had jobless claims, which came in, initial jobless claims coming in higher than expected, continuing jobless claims coming in higher than expected. Philadelphia Fed manufacturing coming in a little better, but still negative. But the key components of that employment index and that dropping, and prices paid dropping. Also, we have industrial production in about 10 minutes coming out. Industrial production numbers. And then we have Williams speaking 5 minutes before the cash open. Housing market index at 9 a.m. Central. We got Waller speaking 9:30. Barr speaking 9:35. Kansas City Fed at 10 Central. Cook at 11. Mester at 11. Oh, and then it pretty much winds down. So, are we finally getting the pause / pullback with daily cycles at the high? We still have Apple, Microsoft, Google of the mega caps up, and Nvidia pulling back. Cisco, which had earnings yesterday, really getting hammered. Also, Pan W, Palo Alto dropping, and that was a beat. Cisco was a beat. Tesla pulling back, Amazon pulling back, Costco getting hit again. Walmart, as Sterling mentioned, getting hit. Target, after its big pop up on earnings on Wednesday, finally pulling. I thought that was a way overreaction to Target's earnings. And oil softer. Let's just refresh the sectors real quick, and you can pretty much see. So it's sort of a rotation into a little defensive utilities and healthcare. Utilities also with yields dropping. Comm services still strong, but consumer cyclical now, that's been on a tear recently, and consumer defensive both dropping. Fed watch, no hikes in sight, first cut going into the May meeting. Fear and greed, close to greed, but this should pull back today. Let's just take a look at the markets. Oh, weed is legal in Maryland now. Well, there you go. Are they going to lay off greeters and to cut expenses? There goes my future job. Crap. So what do we have? We got Walmart. We had Macy's this morning. Does anybody have the Macy's results? We had Williams Sonoma results in there. After the close, we have Applied Materials is pretty much your biggest name out there, and then it winds down going into Friday morning. More important, let's just get to the price action. So yesterday, when you were saying a double, what were you looking at right now? Right now, the area I'm watching for the continued pullback is if we start breaking below about 45.05 on the S&P. We break below there. I'm focusing on about 5,000. We could be a little choppier, but once we really get below about 44.90, you could get into this single candle on the 4-hour clear path move. My major support area, should we finally get the bigger pullback, my initial one is 44.71, then about 44.50 for the pullbacks. Now remember, daily cycles are back at the top and very overbought, so we should at least be into a pause pullback before potentially another key push up. Cycles aren't at the top yet for the weekly. We're going to have to finish out this weekly and go into next week. So we could top out weekly cycles next week. So, or early the week after, since next week is Thanksgiving. But on the shorter term, for me to start watching for more breakouts, we need to start getting above about 45.28 with a stronger tick. Interesting enough, let me just jump to the VIX real quick. The VIX is still, even with this, it's not really showing much fear in the market. So this can just be an ordinary pullback at this point. But pay attention to about 1450 on the VIX. If it starts getting above 1450, we could start getting a bigger pullback on that. Other than that, we've already broken below yesterday's lows, but bounced. So I'm just going to be watching those pre-market lows going into the open. The NASDAQ, again, we tested the yesterday's lows, which we have sort of the topping candle right here with cycles at the top and overbought. Key support on the NASDAQ coming in about 15,624. The next minor support level is 15,733. Let's just fine tune that. And that's into a single candle clear path move. You start breaking below that level, though, that could get into the bigger pullback. Into the open, I'm really going to be watching this. Okay, I go off about 15,830 area into the open. Bullish, if we start getting above about 15,895 and then can sustain something back around 15,900 again, I'll get into possibly choppy bullish mode. Other than that, not much. Dow key support 34,950. We start dropping below 34,950. I'm going to 34,806. The breakout areas I'll be watching is 35,052. I'm more focused on choppy, bearish, though, on everything right now. The Russell is actually the first thing I will look to for short setups. The Russell, if it starts, especially breaking below about 1791. All right. This could be a nice little three-wave corrective pattern. Hit the 200, hit the area between the 50 and the 62.5. So if we start looking for short things, the first thing I would specifically watch again is the Russell. All right, and then the key levels. Still, if you start breaking below that 1791, you have about 1781, then 1767. So, what would I be looking at from the long side? Probably if we don't get a big pullback, either the Dow or the S&P first. What else do we have now? The DAX. We have the DAX hitting the stop raise on the little sloppy little sloppy inverse head and shoulders. The key target, though, the key after this first one, this 15,838, the key target is 16,050. You might get some minor reaction at 16,000, but I'd be watching 16,000 to 1650. Also, you see here, topping area back in August, topping area at the end of August, beginning of September, topping area mid-September. So that is very, very, very significant resistance up there. And overbought cycles at the top. Keep that in mind with the DAX. Hold on with the DAX. Back to that real quick. Weekly cycles will probably also top out next week, and you can see the weekly pattern. If it can get through that 1650 area, 16,275. But I'm really focused on that 1600 to 1650 area. The notes sort of still in a channeling corrective pattern. It's very yucky though. The notes looking to push up. 109.07 is the next key area there. Just checking something here. Going to change this level slightly. There we go. 109.07 and then 109.20.5 should it continue up on its up move. It still has room to run up on the daily after cycle lows. Also, I did forget to mention that this day, which reward to risk really sucked, but so it had to be traded on the break of Monday's high, was a % beat buy. set up, so we could see some follow through for a couple more days. Weekly cycles get to the top though, and against the weekly rotation zone, so I'm really focused on this 109.07 area. That is where I'm focusing the yields. Dropping the key area on the yields I'm focusing on is this 441. Remember, we're still between the 50 and the 62.5. We've got some waning momentum. We've got some potential divergences. We still have some daily cycles going down, but weekly cycles starting to look like they're bottoming, and some support down here at the bottom of the weekly rotation zone. 10-2s still pausing here. Nothing going there yet. Dollar index, going to be watching again next week / possibly the following Monday after Thanksgiving and after Black Friday for a bottoming pattern. A very major support is about 103.20. If we break below Monday's and yesterday's low support area, we still have daily cycles heading down, weekly cycles still heading down, but getting closer to a bottom, but not yet. One of the better potential setups, but that might never trigger, is right now in the good old crude. We still have that head and shoulders, so this would be the counter trend little indicator right here, but that's the only setup that could be from the long side. Need a close above 79.77. Other than that, if we break the last Wednesday's support, we're looking at 72.85. And remember, we also, because Wednesday also closed below the 62.5, we return to the rotation zone. We're rotating back down. I'm focused on hitting that 72.85, 71.49. The only other thing is unless we trigger the double, which could still be triggered especially with the daily rotation zone gets out of the way. Now, just because there's a potential double, that does not mean I'm bullish. I'm still watching for downside price action. That's the only thing that would reverse it in the short term. Gold popping here. Still, we could get at least an update through tomorrow. We still don't have cycles at the top. So if you're trying to do something in the short term and been doing anything on the bullish side, the key area that you should be watching is about 1988. Especially on a closing basis today. On a closing basis. So that would be the next target. Above there would be 1998.7, so 1999 area. But on a closing basis, 1998. Anywhere between this 1977 and 1988 is the short-term rollover zone. So please keep that in mind for stop placement. Yen. Still, I'm just keeping an eye on this horrible double pattern, but we could actually take it below the 50 on the first time of the daily if that were to trigger, and farther back into the weekly rotation zone. But overall, this is still basing at a very high level, working off some overbought conditions and getting cycles to the bottom. So unless we really break below this 50, I'm not interested in anything to the short side in the yen, because it could come down here and even hit key support. Euro still in the longer term rollover zone. If it does pop up again, keep an eye on 109.20, 109.20, 109.25, right in front of that 62.5 level. That's what I'll be focusing on to see if we get a topping pattern around there, with daily cycles getting back to the top and weekly cycles getting to the top. So a lot of these cycles are going to be changing, or at least putting us into a top, or a bottom cycle correlation in the next week and a half. Please keep that in mind. That's when I really start liking, because when the cycles on the daily and the weeklies are in alignment and we get reversal patterns, they tend to be, not always. Remember, that's why you always have to manage your stops, because anything can get stopped out, but they tend to be these stronger moving trades. So I'm just going to skip the pound for a while. There's not much going on. You're better to focus on the euro right now, the dollar index, and the yen, or some of the minor pairs, which I don't cover here. The spiders, Not closing above this other key level. Watching for a pullback. We still have a gap. We still have a gap back to Tuesday's close, 448.73. Right now we're trading 449.33, so that'd be my first target. If we really drop, 446.32 is the key area to watch for, other than using some minor levels. You start breaking below about 446.87 and that opening price that I already mentioned, then we could get into another potential partial gap fill, and that other gap left behind is back to 440.21, but I'd be watching for a partial fill, not a full fill. So I would use, again, from the closing price on that day, you could come up to these highs, and then I'd use the gap harmonics and really watch it 440.40. And I don't cover that all the time, but for the people who tune in regularly, they should know about that. To the upside on any rally, 449.68 yesterday's close. Then I'd look at yesterday's opening area right around 450 to 450.11. Then yesterday's high. Besides using, and then I'd look to short-term harmonics, the upside, but major resistance at around 453. To the Qs, to the upside would be to the gap fill for 385.62. And then I look at yesterday's opening area, 387.25, and then yesterday's high. Remember, we're into a very key top area on the Qs also, with overbought and cycles at the top. But yesterday's lows coming in 384.24. If we start breaking below that, your next key area is going to be about 383.20, 383.18 to 383.20. And then I'll go to the potential partial gap fill. First level would be about 382.50 to 50% harmonic, and then I'd be looking at 381.18. So that's what, and the full gap fill, well, before the full gap fill, it would even be 378.50, and then back to the full gap fill, 377.25. All right. What else do we have? There's the Cisco results from yesterday, down 12% pre-market. What else do we have? Yeah, hit that like button. I agree. Trading is a scam. Well, a lot of trader. Why are you on this channel then, Ninja Max? By the way, a lot of retail, because they don't learn to trade or invest properly. But you can't say trading's a scam. I was a market maker, Ninja Max. So, but people, if you don't know what you're doing, it's like if anything. If you go and sit down at a poker table and you don't know how to properly play poker, you're probably going to be the person losing all their money. Like to steal your fat the future's agile. Thank you. Open enrollment on the website course. I'll think about that again. I'll think about that. Daniel, there have been some fun days in the last few years around Thanksgiving in crude oil. Well, thank you for bringing that up. I had forgotten that, Daniel. Thank you for tuning in. So thanks for posting that, Sterling. Again, you know what? If anything in life you don't know what you're doing, you can get taken advantage of by smart market participants. All right? That's why I try to keep things simple. Also, you don't need to watch 80 million indicators and stuff. You can just trade with pure price action. The reason I pull in some key indicators at times are because it helps a lot of people see things. Key support, Tesla's still back at about 231.50 before the gap left behind. I'm still watching for a rollover play. We could easily get the pullback, next push higher, and then another rollover play. The massive double has not been invalidated yet, the double top area. So that's where that sits. NVIDIA finally pulling back a bit, but nothing else new. Watching for a pullback here, but other than that, nothing substantial. What else? Oh, hey, Alan. Good morning. Nice to have you back, Alan. All right, let's just peek in at Walmart. By the way, Walmart just going through that little next harmonic area, close above it, but look at that gap down. And by the way, on the weekly, this is not a double top. This is not a double top. But Walmart now is already gapping way below key support. So not good. I'll be watching for a more substantial topping pattern in Walmart coming up after this initial reaction. Cisco, one of my still the poster childs of why you always use stops going back to 2000. But look at this. I mean, this is shocking. Remember companies that even had crappy earnings or minor beats were gapping up. Now look at this. They actually beat. Their guidance wasn't very good, but look at this is just getting utterly destroyed. Utterly destroyed. So back into the key support area. Nothing's guaranteed. That's the point where you have to understand probabilities, and you have to manage position sizing, and you have to manage your reward to risk. Okay? Nothing is guaranteed. But let's say if you can't make money with like a 65 or 70% probability, then you're doing something wrong. You're not managing reward to risk. You're not taking your trade expectancy, and if you don't know what trade expectancy is, look it up. It's taking an example of your key target areas so you take your potential profit modified or multiplied by your percentage of wins, and then your potential losses are multiplied. Why do I keep saying modified? Multiplied by your percentage loss, and that gives you a trade expectancy. If you have a trade expectancy below 1, you're pretty much screwed because after any slippage and commissions, you're going to just lose money. So, the higher your trade expectancy, the better. People want guarantees and they don't know how to manage trades. You have to manage trades, and there is nothing that's going to give you. Even people are telling you, I got a 95% system. It's either not tested properly, it's very micro trading or something else which can't be executed properly, or it's not, it's a scam. All right, or it's got very limited data, or it's been back-tuned, back-tested, which can fall apart. Like it's been optimized in a very small back-testing area. You have to learn longer-term price action probabilities. There's stuff with patterns, but you learn to look for things. I love things that have even 60% probabilities. With proper reward to risk, you can make money. But if people are looking for guarantees, there are no guarantees in trading. There are no guarantees in a lot of things in life. That's why you have to manage it. But anybody who's not telling you that is not telling you the truth about stuff. Okay? Oh, yeah, I know how the fourth quarter push goes. Well, thank you for tuning in when you can, Alan. I really, really appreciate it. So sorry about getting sidetracked right now. Mike, there a very sloppy daily head and shoulders on the 10-year yield? Let's take a look. A very sloppy. This one's too downward sloping. No, do not. And the flat neckline does not work. No, don't. This being the shoulder, the targets are running away. If you were going to do another trade from the short side, I really need to get this to break, from my perspective, below about 4.33. Then I'll be watching for more of a pullback. I'm not expecting that to happen in the short term right now. The thing I'm keeping an eye on, which actually spiked down enough, and I didn't see it on the yield. Come on, get out of my way. We've now spiked down enough for a potential little mini double. Might never trigger. But that's the key thing now that I'm watching, because it is completely valid to reverse this move. The move starting on Monday lower, not the move starting on all the way back here. From Monday the 23rd, I'm talking Monday the 13th. That's the only good setup I'm watching, even for a stronger bottoming pattern down here. Do I see any tradable pattern on them? I got a jump veil on the weekly. I mean, I'd be watching if this can get even a partial pullback. I'd be watching to see if it can hold this base above here, above this breakout level. Now it's against key resistance, but it's back above its 200. It starts breaking. If it doesn't get a pullback and it breaks above this 37.5, which is also the top area from the 25th, target 1645 would be my first target. Even if it pulls back, as long as it can hold 1469 and then make a reversal pattern. And you see here, this is the weekly chart. That would be the key breakout level, is trading. Watch to see where it closes this week, but if it can really get some moving on above this 37.5, this 1530 area, you could see it breaking out from this base. So that would be the key thing I'd be watching, and I'd be watching on a pullback. If we do get a pullback pattern, I'd be watching on the daily. Okay, the daily, for if it does partially fill this gap or even come down to this level, I'd be watching for the daily a reversal pattern down at this area. With that, I have to roll into the open. I shall talk to everyone later. Let's just see what the tick opened at. Let's see what the tick did. Not that bad. Pretty flat tick. Pretty flat tick. So I'm going to be watching into the open minus 400. Starts getting me in a choppy bearish. Starting to get above 500 today. Starting to look for possibly choppy bullish, but I'm erring on the side of choppy to choppy bearish going into it. Back to the S&P. It's really, besides this back and forth price action you see since 8 to 805, you still have major support about this 4508, and it's got to get above 4582 before I get into choppy bullish. So I'll be watching for potential support and resistance to hold. You are welcome, Jacob. Thank you, and I will talk to everyone tomorrow. Bye for now.